Hi traders, welcome to my Forex video tutorial. In this tutorial today, right, we shall be talking about this Forex price action strategy. Okay, so basically, right, with this strategy, what we are doing is that we are actually making use of price action, which is actually the movement of the market. Okay, so what exactly is price action? Okay, some people will be asking this question. It's referring to the candlestick patterns or certain movement of the price. Okay, and basically, right, price action is actually an leading indicator. Unlike most of the indicator that we are using, like the MACD, like the stochastic, like the RSI, like moving average, they are all lagging indicators because they make use of the historical data to plot these indicators. However, right, using the candlestick patterns, which is actually known as price action, is actually leading indicators. From the candlestick pattern itself, it's actually helping us to predict, okay, the price movement, the next movement of the price. Okay, and this usually gives us a very good entry signal. Okay, but however, you have to know which are the important price action to look at, because there are a lot of candlestick patterns. Because if you go and search for candlestick pattern, I can tell you that there's a lot and a lot. It could be more than 50 to 60 different types of candlestick patterns, and not all of them are equally important. Okay, I've been trading for a few years now. Basically, right, from my observation experience, I know which of the candlestick pattern actually works, and therefore, right, in this tutorial I shall be sharing them with you. Okay, so there are two main types of price action. One is the continuation patterns, whereby the price make a sharp movement, then they come out with such a patterns, and it will continue in the downward movement again. We call this a continuation patterns, whereby the price will continue the previous trend. A reversal patterns, right, what it does is that it's actually warning us that the price is going to reverse soon. So it tells us to go against the trend, enter a trade to go against the trend. Okay, so basically there's two types of price action, the continuation patterns as well as the reversal patterns. So for the continuation patterns, right, these two are the important one, the symmetrical triangles as well as the flag. They are two very important continuation patterns. Okay, later I shall go through with you one by one how they look like and how it works. And second, for the reversal patterns, right, basically the double top or bottoms and head and shoulder patterns, the two very useful reversal candlestick patterns. Okay, so let's take a look at how it looks like. Okay, from this picture here, you can see that a symmetrical triangle looks this way. You can see the triangle looks symmetrical. Okay, this symmetrical triangle. And what happens, right, it usually is a continuation patterns. The price actually moves down, a sharp movement down. They start to form this triangle, where the price moves down, start to form this symmetrical triangle. And whenever you see a symmetrical triangle, right, it's always telling you that the price is going to continue in its direction again. And sure enough, you can see the price actually breaks down and go down again, continue in this pattern. So what we do as a trader, we wait for the valid breakout here and we enter a trade to make these profits. Okay, the symmetrical triangle patterns. And number two, the flag formation. Okay, for this flag formation to work, right, basically you must have a long candle which acts as a flagpole. It must be a very long candle like this. You can see flagpole. Then you can see here, it moves in a pattern here, which is a flag. You can see a flag patterns. And a flag pattern is also a continuation patterns. What we do is that we wait for price to make a valid breakout and enter a trade in the same direction again, and we make a profit for the run. Okay, so these two are the continuation patterns, and next we shall go through the double top or double bottom formation. Okay, a double top, right, basically is this one we're seeing here. It's actually M. Can you see M? A double bottom will be a W or opposite formation. Okay, so a double top would look this way. You see, it's an M shape, and these two, right, must be almost the same height. Almost. It will not be exactly the same, it will be almost the same. Okay, what you do is that you draw a neckline by joining this 2 points, the low point. Okay, the low point here, you join, you form a neckline. So what we do is that we wait for the price to break downwards, break below this neckline to enter a trade. Okay, later on I shall show you the example of how to trade the symmetrical triangle, double top, double bottom, and the head and shoulder pattern later on. I shall show, but now we just take a look at how it looks like. Okay, this is the head and shoulder patterns. You can see head and shoulder patterns. So for head and shoulder pattern, right, it looks this way. You must have a left and right shoulder. Okay, This is bottom head and shoulder pattern. The left and right shoulder must be higher than the head. You can see the head is the lowest point. Okay, left shoulder, head, right shoulder. For the top head and shoulder pattern, it's just the opposite. You have left shoulder, head higher, and a right shoulder. What we do is that wait for the price to break out, we enter a trade to take the profits. Okay, so now I shall show you exactly how you make use of this these 4 patterns and how you do a price projection telling you where to exit your position, which is very, very important stuff. Okay, so let's take a look at the example. Okay, this is basically my website, forexindicator.org, and one of the articles that I've written, right, is actually talking about this triangle patterns. Okay, this are continuation patterns. So let's go straight to the symmetrical triangle. You can see this is a picture of a symmetrical triangle. Okay, and here, right, I show you exactly how you do a projection. You can see here, you just have to take the highest point of the triangle, lowest point of the triangle, measure the length. All you have to do, just project this length to where the triangle breaks out. You can see here, the triangle breaks out from here. So you project here. This is where you exit position. You can see sure enough, the price move down, up, down, down, hit our target before it move out again. You can see how powerful this price projection is. Okay, therefore this is how we do a triangle price projection. Okay, if you're not clear, right, you can just visit my website at forexindicator.org and you can just read through the blog post for better understanding. Okay, so this is the symmetrical triangle. Next we shall go through the double top, double bottom. Okay, again this is a blog post I've written. Okay, you can see. Okay, how to trade this pattern, I'll show you. Okay, step 1, draw the neckline. You can see this is the neckline. Step 2, wait for a price to break below the neckline and enter a short trade. So what happened here, the price moved up. You can see it breaks below. Here, this is where it enter and make the profits. Okay, similarly for this one, you can see the bottom, double bottom, you can see here. So the price break up, you can see break above here. This is where it enter a trade. The price moved up, moved down, move up. You can see the profit that we make from this movement. Okay, so I hope that you understand this, how this thing works. As for the top, for the head and shoulder patterns, okay, this head and shoulder patterns, you can see. Okay, here I'm showing you how you do a price projection for head and shoulder patterns. You just can see the left shoulder, head, right shoulder. So from the top of the head, you measure the distance from top of the head to the neckline. Then project it to where it actually breaks out. This is where we take our profit. You can see the price move down exactly to where we want and start to move sideways and take our profit here. Okay, can you see that? Okay, so the price, okay, like I said here, be realistic because basically, right, trading, there's nothing 100%. You can see even though I do a price projection here, okay, the price moved up and down, eventually down, right? It did not actually hit a target. It traveled about halfway and started moved up. Okay, but most of the time, you will hit our target. But there are also times whereby it will not, because trading is a game of probability. You have to understand this. Okay, so I hope that you guys enjoy this video tutorial. And for more Forex indicator tips and trading strategy, you can visit my blog at forexindicator.org, and which is here. Just now you take a look at this website here. Okay, on this website, right, basically I've been maintaining website since 2009, and I actually share with you the various indicator that I'm using. Okay, and a strategy that I'm using here. I swear there's a Forex FAQ here, whereby the subscriber of my free newsletter ask me questions and I try to answer them twice a week. Okay, so this newsletter is just over here. You can just sign up for my newsletter, which is free. Okay, and currently there's about 6,170 people subscriber to this newsletter, and you just ask me questions, I try to answer you twice a week. Okay, so I hope that you guys enjoy this video tutorial, and I'll talk to you again.